Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Monday, February 19th. The year's 2024. Let's talk trading. Not trading with Walmal. By the way, today is a holiday, so that's your hint. These videos are for educational purposes only. Your results may differ from mine and difference for Walmal. Walmal, you haven't taken any trades today.
Yeah, it's a rare day for me. Normally by this time I'm usually done for the day. Generally speaking, probably taking 8 to 10 trades, something like that. But zero trades. And there's been some trades out there, but here's the reality: is we've had a movement of about 38 pips.
I got 35 on my chart here.
Okay, right. So about 38 pips, 35 pips, range for the day. But you then go and look at the hourlies, and it's like, during the London session, the opening London session, you were getting movement of 10, 14, 16 pips. And then it dropped down to 11 and 9. And then last hour, we actually had a movement of 15 pips. So could you have made money on that? Sure, you could have. There's enough room in there to do it. But the reality is that what I was seeing anyway was, there was movement, but it wasn't the type of movement that I like. What are my setups there? Yeah, they kind of were. What I mean by that is, did I get a flip-flop box? Yes, I got a flip-flop box. Did it move out of the flip-flop box? Yeah, it kind of moved out of the flip-flop box. And what I mean by that is that normally I want to be in and out of a flip-flop trade, 2 minutes, 3 minutes max. That's generally speaking how I like to go trade that. And yeah, I could have made, 2, 3 pips, 4 pips on a trade. But the problem was I was going to sit in that trade sometimes as much as 15, 20 minutes, even longer than that. But not because the trade was going against me, but because, it was a situation where it was just, moving like molasses. We're just literally sitting in mud. It's just not moving, And so for me, that's the style of trading that I do. It doesn't make sense. It doesn't align. So would I have broken any rules by taking those trades? No, I wouldn't have. But at the same time, that doesn't mean that's a smart thing to do, because it's just not what I like to see the market doing. So I think that what we have to sometimes do is read the market, not just read the charts in terms of, are we seeing our setups? Are we seeing what we like to see? But are we also seeing on the charts the movement that we expect the market to be moving during the day? And on a slow day like this, when half the people who are trading are sitting at home, drinking a cup of coffee at home and not in their office, not in the pits, not making trades, that it doesn't make sense. And there's a danger element to it as well. And what the danger element is, because there's probably very little volume. I haven't gone and looked at a volume indicator or anything like that. Not that it's all that easy to do anyway in Forex, because we don't have a consolidated market. But because we can, based on the type of movement we're seeing, we can assume that there's very little volume going on out there, because it's just not moving very well. The danger to that is some guy comes along and he's working for some institution that is in, for whatever reason, on this holiday. What happens is he comes in and his boss says, you need to go and buy $50 trillion worth of dollars and take it out of our holdings in pounds or whatever. Obviously exaggerating and making numbers up here. But you get my point, and all of a sudden he's buying all these dollars. What's going to happen is that that on a regular day that would go and move the market. But on a day like a holiday day like today, it will just literally go and tank the market. And I've seen that happen in Forex, and where all of a sudden on a holiday where you only got a 38 pip, type of range for the day so far, the next thing you know, out of nowhere, no warning, no technical could have picked it up. All of a sudden, you see the market tank 50, 60, 100 pips for no apparent reason whatsoever. And so it becomes dangerous in that sense too. Imagine yourself getting into a trade, you place the trade, you haven't had a chance to go put your stop loss in yet, and all of a sudden the market just tanks like that, and you're on the wrong side of it. Sure, you can be on the other side and make a ton of money, but at the same time, you could be on the wrong side. And so just for that reason alone, I don't like trading days like this when it gets like this, or at least if I'm going to trade it, I'm going to be very, very tight to the vest. So I like to go and use these days as what and Tiro, you can back me up on this. I like to go and have, every once in a while, I have these days I call education days. What do I mean by that? I got the screens up, but I'm doing more reading than actually trading. I'm reading, different people's ideas on things. Always trying to go and expand my knowledge. So that's my idea on a day like today.
Hey, speaking of reading, there was a trader. You had mentioned a few videos ago about a book that you read, and you were going to see if you could find it. Did you ever find it?
I didn't. In fact, I saw your email that you had shot to me, and I looked, and I couldn't find it. That doesn't mean anything, because my office is kind of a mess right now, in the process of reorganizing my office. So I can't find anything. But I'll continue to look again.
Okay. Yeah, and you had mentioned how, in days like today, one trader somewhere pushes a button and the market moves, dozens of pips or 100 pips. Remember when we first started trading, how, like once or twice a day you'd be in a pound trade, and then out of nowhere there'd be like a 10 or 20 pip move. Like you said, sometimes it's in your favor, sometimes it's not, and sometimes it was even more than 20 pips. Those days seem few and far between.
Yeah, you're exactly right. I think the market, for whatever reason, is quote unquote maturing, whatever that means. Because I read an article that was on Barron's website probably about a month or two ago, where they were talking about this idea that the Forex market is actually maturing into a more mature market, meaning the market is starting to move in ways that are more settled. So in other words, it will move sort of like, like folks who follow the S&P and trade the S&P. Yeah, there can be big moves on the S&P, but it's not like just, wild, wild west type of moving anymore. It's now more of a methodical move, and that makes more sense. Now, whether or not that's true or not, or just this one guy's thought on the process, I don't know. But I have to agree with him, only in the sense that not necessarily that I think the market is more mature, but it is certainly just moving in a more stable type of way. And it just may be the market condition of, for whatever reason. Who knows? It could be that, and as much as it could be the traders have become more understanding of how the markets actually move, and therefore the markets don't move in big things. It could also just be that people are no longer having to go and move. One of the big moves that used to cause the Forex market to move a lot was, I mentioned this on the video, I think on Thursday of last week. IBM's got, has to go and pay all their employees in the United States, and so to make payroll, what they would do is they would liquidate all of their funds that they, let's say, had in Europe, and they would have to go and take it, and prior to the advent of the euro, they would actually take it, and whatever currencies they had in Europe, they convert them into the pound, and then convert the pound into the dollar. And that's part of the reason why the pound became one of the the biggest movers within the Forex market, because then if they were sort of like the conduit. Everybody went through the pound in order to get to any other currency. So if you want to go and change Swiss francs over to the dollar, you wouldn't go Swiss franc dollar like you do today. But back in the old days, you go Swiss franc to pound, and then pound to dollar, and that would cause huge movements, within Forex. Nowadays, that doesn't really happen. It doesn't work that way because now you obviously can go from a Swiss franc directly to a U.S. dollar or any other currency for that matter. But because the institutions having to do that back in the old days, it could very easily go and cause huge movements. And people knew that too. And people would actually go and follow, okay, these big institutions, they're all lined up. They're all going to go and have a bunch of cash on this particular day. Okay, we know this is going to be a big moving day for, let's say, the pound dollar or whatever it may be, because of all these institutions needing to clear funds.
Yeah, in fact, I remember, I think my old trading buddy, Airball, he used to, I forget, there was some company he knew, it's like, well, they do payroll on this day. And, and that was one of the things he would wait for um, and to take advantage of because you knew they were coming in and they're going to have to convert the money.
Right. Nowadays, because of the advent of computers, that the computers didn't exist then, but because the computers, what's more important for a company that's doing that, unlike a bank, is not necessarily getting the best price, although of course they will always want the best price. But the most important thing for them is a stable price so that they know what the cost is going to be. So what do? They sit there, okay, I got to make payroll on Friday, or big payout on Friday, whatever it may be. What they'll do is they'll go and stage their conversion of cash across the week. And that way they're not influencing the markets. And because a lot of companies are doing that now, what happens is you don't get those big institutional changes anymore. Banks on the other hand, you got two things going on with banks. One, they're doing those type of institutional conversions for companies, and at the same time they're actually trading, trying to go and make money at the same time. So they got, they'll have they have a dual purpose in the market. Supposedly, it's supposed to be Chinese walled, meaning one side of the house doesn't know what the other side of the house is doing. I don't know if I believe that or not, but that's what they're supposed to be doing.
Right, right.
Because let's face it, if you're trading, as a as a trader, and that your institution is going to drop these, literally dropping, hundreds of millions of dollars, and they're going to have to do it across a very short period of time. And you know that ahead of time, and nobody else does. That's a big opportunity to go and make some money, but at the same, supposedly they can't see to the other side of the bank and know those things are actually happening.
Right.
In fact, here in the U.S., you're not, let's say you're working for a company, for some type of brokerage of some sort, and you got a friend that's working for an institution. Theoretically, you're not even allowed to go and speak to that person to know that, hey, when they're going to drop their cash. That's technically, illegal with the SEC, and you can get yourself into a lot of trouble. Now, they've developed all these, the thing is, I know that they still cheat. You can't prove it, but, they've found ways to work around that, I'm sure.
Yeah, well, whenever money's involved, there's always going to be somebody who's going to try and push it to the limit, take advantage, and some people are just going to outright, like you said, cheat, lie, steal, do whatever. But you know what? Even on a slow day like today, the fastest 15 minutes in trading is over. So, fellow traders, the lesson to be learned is some days are just days where you just don't trade because the market's just not doing it. And you have to look for that. Sometimes we look for reasons why we need to trade or why we should take this trade, but sometimes you need to look at the other side of the coin. It's like, is there anything screaming at you saying, don't do it? Because you need to remember and always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out. And have a fun and safe holiday. Bye.